Hello, everybody. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets are down today. Dow Jones is down 1%. Nasdaq is down 1.5%. S&P 500 and Russell are down about 1%. You can see in this heat map right here that it's being led by NVIDIA and other chip makers, but it's really red across the board, except for a few healthcare stocks and consumer defensive stocks. Oil prices are up 3% today to $66 per barrel. Yield curve is up 4, 5, 6 basis points, depending on where you're looking at the curve. Today, we got the S&P Global US Manufacturing PMI final number at 53, slightly worse than expected, 53.3. But more importantly, we got the ISM Manufacturing Index number for August at 48.7. About as expected as 48.6, but contractionary area. I think manufacturing index, we're going to look in this a little bit more, has been contractionary since April. And that construction spending also came in at negative 0.1%, but that's for July. Tomorrow, we're going to get JOLTS. Okay, and then Thursday, we have a ton of, Thursday and Friday, we have a ton of employment numbers. Thursday is ADP, unit labor costs for Q2. We're going to get initial claims, continuing claims, ISM services, all very important reports. And then on Friday, we got the non-farm payrolls, private payrolls, unemployment rate, average hourly earnings, average work week. Okay, so employment heavy week. Let's read the article of the day. Wall Street hits over 1 week low on tariff uncertainty, data in focus. Wall Street's main indices hit a more than 1 week low on Tuesday as investors returning from a long holiday weekend worried about the legality of President Trump's tariffs and awaited crucial economic reports. A divided U.S. appeals court ruled on Friday that most of Trump's tariffs are illegal, but allowed for the levies to be in place until October 14. The Trump administration can still file an appeal with the Supreme Court. Yields on longer-dated U.S. Treasuries rose on Tuesday, with ones on the 30-year notes at their highest levels in more than a month, pressuring equities. The CBOE Market Volatility Index also touched its highest mark in over 3 weeks and was up 1.85 points at 18. Still very low. If the Supreme Court rules the tariffs to be illegal, the government has to pay all that money back. If there's more debt, yields will rise higher, which means more trouble for the market, said Robert Pavlik, senior PM at Dakota Wealth. Indices paired some declines after the ISM said that its manufacturing PMI rose to 48.7 in August from 48 in July. I think the employment number actually came in still contractionary. There was some positive news on prices paid. It wasn't as hot as it was in July. Still, most S&P 500 sectors traded in the red, with tech stocks the biggest drags. NVIDIA fell way more than 1.5%. 3.5%, I think now. Apple, Microsoft also down. Conversely, I think 3.6% gain in Pepsi after Elliott Management disclosed a $4 billion stake in the beverage giant, launching an activist campaign, limited losses on the consumer staples sector. Meanwhile, caution also prevailed ahead of August non-farm payrolls report due on Friday, which will follow a monthly private payrolls reading and job opening figures. Marks are pricing about a 92% chance of a 25 basis point cut in interest rates at the Fed's next meeting, according to CME Group's FedWatch tool. Investors' dovish tilt came after July's weak report, with Fed Chair acknowledging the growing risks to the labor market at the Jackson Hole Symposium. Markets are entering seasonally dour September, which, according to DataTrek research, is the only month since 1958 where S&P 500 mean returns are negative. An announcement from Trump related to the U.S. Defense Department later in the day will also be watched. In stocks, gold miners gained after bullion prices. We're going to talk about gold later in the episode. U.S. listed shares of Harmony Gold rose 6%. Barrick Mining gained 1%. Newmont added 1%. Kraft Heinz fell 3%. The packaged goods giant will split into 2 listed companies. And Buffett came out on this and said he's disappointed about this decision. I think Berkshire Hathaway removed 2 of their board of directors from the board. Quarterly earnings from retailers this week also be on the radar. Declining issues outnumber advances by 3-to-1 ratio on the NYSE, 2-to-1 on NASDAQ. Let's talk about debt. UK market slide as debt angst drives 30-year yield to 1998 high. So it seems like the 30-year yields are rising across the world. So it's not really necessarily related to, like, some people are saying, well, the Trump is trying to fire Fed's cook and, question Fed independence and all that. And if that was the primary reason, I think we'd see US yields rising and maybe not the rest of the world as much. So I think this is something else happening here. UK markets suffered a fresh sell-off on Tuesday, with the yield on long-dated bonds hitting the highest since 1998 and the pound tumbling as pressure mounted on Prime Minister Keir Starmer to win the confidence of the investors in the government's budget. The nation's assets have become increasingly prone to bouts of weakness as the UK's precarious fiscal position and stubbornly high inflation make it a target. The problem for Chancellor of the Exchequer, etc., Rachel Reeves, is that each route pushes up the debt cost and worsens the fiscal drop even more, leaving the economy at risk of ever higher borrowing costs. Reeves is due to deliver a budget before the end of the year, and the Chancellor is scrambling to find savings or raise taxes to plug what Bloomberg Economics estimates is a £35 billion or $47 billion budget hole without depressing economic growth. That may prove politically difficult, given the government had to U-turn on welfare reforms after rebellion among lawmakers. Quote, the situation in the UK is quite dangerous at the moment because of the return of the bond vigilantes, said Ludovic Subran, Allianz's chief investment officer. What is striking is that it took so long to factor in the return of inflation into gilts. Forward guidance on the fiscal side will be needed. So you can see in this graph right here, UK 30-year yield rises to the highest since 1998. So this is tremendous. I mean, you can see the downward trend in the last 2 decades since the great financial recession, great financial crisis. And all of that is reversed in the last couple of years here. That's amazing. And we're seeing this not just in UK, in many major economies. Yields on 30-year gilts jumped as much as 8 basis points to 5.72% on Tuesday, and the pound weakened as much as 1.5% against the dollar, the biggest drop since April as the currency lagged its major peers. The FTSE 100 index retreated 1%, and an index of domestic stocks fell 2.2%. When questioned on the topic in the House of Lords, Treasury Minister Spencer Livermore said gilt yields have risen in line with global peers and moves have been orderly. Quote, our commitment to the fiscal rules is non-negotiable, and we have a clear plan in place to put the public finances on a sustainable path, end quote, Livermore added. While record demand for the sale of 10-year government bonds Tuesday appeared to buck the trend, the debt was sold at a discount to the secondary market, which made the high yields hard for investors to resist. The UK's benchmark 10-year yield is the highest among group of 7 nations, trading up 6 basis points at 4.81% on Tuesday, the highest levels since January. So this puts a little bit of upward pressure to US Treasury yields as well. So that might be part of the reason why things are up this morning. Let's switch to Tesla. US EV sales first half of the year. You can see GM added nearly 40,000. Honda added about 25,000. Stellantis up about 12,000. And on the loser side, Tesla by far losing market share here, more than 30,000 down. Hyundai down about 17,000. Mercedes-Benz down about 10,000. Rivian down about 8,000. Okay, so GM, especially the Cadillac brand, they have really good EV sales. 20% of Cadillac sales are EV, which is amazing, right? Okay. On the other side, Tesla sales soar in Turkey, becomes number 2 brand in August. There's a bit of a month-to-month kind of stuff going on here, but I always find it really interesting when Tesla bulls are like, don't look at the monthly sales in one country, and then that's exactly what they do. Anyway, Tesla's auto sales soared in Turkey in August, reaching the number 2 spot ahead of traditional European and Japanese rivals as the US brand benefited from buyers seeking tax breaks and a currency hedge. The EV makers sold 8730 Model Ys, up 86% from the previous month, in sharp contrast to a sales rout in some parts of Europe and with fierce competition from China's BYD and a backlash against CEO Elon Musk. Tesla's Turkish sales trailed only Renault and surpassed local bestsellers Fiat, Volkswagen, Toyota, and Hyundai, according to data from Distributors Association. Tesla accounted for 50% of all electric vehicles sold in August, according to data from industry consultancy EBS Danışmanlık. BYD trailed Tesla with 1639 units, and Turkish electric-only brand TOG sold 1249. Analysts said the jump in August partly reflects erratic allocations. There you go. Analysts said the jump in August partly reflects erratic allocations from Tesla's German manufacturing plant. In March and April, for example, it sold only about 100 units in Turkey before jumping to about 4,000 units in June and July, scoring around a third of EV sales. Turkish buyers are increasingly want electric-only vehicles because of lower tax rates, analysts say. EV market share has held 20% in the last 3 months, up from 8% last year. Tesla's base Model Y, the only one available in Turkey, is taxed at the country's lowest bracket, considerably lower than conventional combustion engine cars, even after a tax hike in late July. I think Turkey tries to incentivize EVs with Turkey has sin taxes on cigarettes or alcohol and large engine internal combustion engine vehicles. So I'm guessing they have a bit of an exemption for EVs. So that might be, and maybe it looks like that's expiring. Maybe that's why there's a temporary jump. Turkey's complex vehicle tax system includes a special consumption tax and value-added tax. The combined rate ranges from 50 to 284%. There you go. Turks also see their Teslas valued in euros as a way to hedge against weakness in the Turkish lira, which has shed more than I think that's part of this bullshit. Tesla sales for the January-August period jumped more than fourfold from the year-ago period to around 26,000 units. TOG was the second best-selling EV, up 42% year-on-year. Turkey's light vehicle market, including cars and commercial vans, was up 5% to 1.3 million units in the 12-month cumulative terms in August. A historical high. But just keep in mind that 1.3 million in a country of 85 million is not very high. All right. Let's talk some AI. CoreWeave stock sinks as insiders sell shares at a very rapid pace. We've discussed this company before. It basically buys GPUs from NVIDIA. I think NVIDIA has an investment in CoreWeave and rents them out to companies. CoreWeave stock sank 11% Tuesday amid rapid-fire sales by insiders after the expiration of the AI data center company's lockup period following its IPO. Insiders, including CEO Michael Intrader and hedge fund Magnetar, have sold over 7 million shares of CoreWeave since its lockup period ended in August, according to Bloomberg data compiling company filings. Lockup periods prevent insiders, directors, senior officers, or investors who own more than 10% of a firm's voting shares from selling their stock in a company for a period after it goes public to prevent a sudden drop in share price. Previous CRWV shareholders have been selling at a very rapid pace following the unlocking of shares, D.A. Davidson analyst Gil Luria, who holds a sell rating on CoreWeave, told Yahoo Finance. He added that the pace of the selling, along with how quickly it's occurring after the lockup deadline, indicates the insiders may think the stock price is overvalued. No shit. CoreWeave went public in March for $40 per share, and the stock rocketed to a high above 183. I think that you got to add a sentence here, I think, this paragraph, about how much difficulty they had going public. I think they had to revise their price down, and then the stock didn't. The stock price had to be defended by the investment bankers for a few days, for a week, I think, and then it surged. Rocketed to a high above 183 in late June in what was viewed as a victory for the AI trade. The company rents capacity in its data centers, equipped with its massive store of NVIDIA AI chips, to big tech firms such as Microsoft and Meta, as well as OpenAI. Shares hovered around $92 Tuesday. Well, that's so off 50% from the peak. Hedgeye risk management analyst Felix Wang, who holds a short position on the stock, said the lockup expiration was brutal, given the stock was a bubble, and noted that the AI trade is losing some momentum. AI-linked stocks have suffered amid investor fears of a broader bubble related to the technology, and as AI stalwart, NVIDIA's latest earnings fell short of investors' expectations. Lurian Wang previously told Yahoo Finance that while they're optimistic about the AI trade, they see CoreWeave as a risky bet, in part due to its mounting debt borrowed at high interest rates. Shares fell in mid-August after the company reported a disappointing quarterly outlook for its operating income and an mounting interest expense, indicating the company isn't generating enough profit to pay debt holders. That's a bad situation. The rapid descent in CoreWeave share price over the past 2 months adds some uncertainty to the company's acquisition of Core Scientific, the analyst said. CoreWeave announced plans to acquire the data center provider in July in an all-stock transaction valued at $9 billion, but with its shares value deteriorating, CoreWeave's stock offering to Core Scientific is worth a lot less. Quote, Core Scientific's accepted the offer at one price, and now the price is very materially different, said Luria. Usually, when a company makes an all-share offer, the share price doesn't change that much between when the deal's announced and when the deal closes. Usually you have kind of brackets, like if it drops below this price, we'll renegotiate kind of stuff, but I don't know the particulars of this deal. And the second AI news, then we're going to switch to Fed stuff. Anthropic valued at $183 billion after $13 billion fundraise. AI company Anthropic said on Tuesday it had raised $13 billion at $83 billion post-money valuation led by investment firm Iconic. Investor enthusiasm towards AI startups has stayed strong despite some doubts over the tech industry spending. Anthropic's run rate revenue, which had grown to approximately $1 billion at the beginning of 2025, was more than $5 billion in August, according to a company blog. Amazon.com-backed Anthropic said the latest funding round was co-led by Fidelity Management Research and Lightspeed Venture Partners. Other major investors include Qatar Investment Authority, Blackstone, and Coatue. All right, back to macroeconomics. U.S. manufacturing activity contracts for sixth straight month in August, its survival. The U.S. manufacturing sector continued its sluggish year in August. Data out Tuesday from the Institute for Supply Management showed the ISM's manufacturing PMI came in at 48.7 last month, an increase from the reading of 48 seen in July, but below estimates for a reading of 48.9 according to Bloomberg. Readings of less than 50 on the index indicated contraction in the activity in the sector. This marked the sixth straight month. Okay, this is kind of interesting because you would think with all the emphasis on bringing manufacturing back home and all the tariffs now in place, you would think that manufacturing activity would be picking up a little bit now. But we're not seeing that. And all the deals that are announced, hundreds of billions of trillions of dollars of press releases, but we're not yet seeing that increase in U.S. manufacturing. On top of that, there's, I think, accelerated depreciation deal in the big, beautiful bill, and still nothing. Maybe it'll come, but we're not seeing that in the last 6 months. The new orders index within the ISM's report, however, rose to 51.4, indicating expansion and marked a strong uptick from the 47.1 seen in July. The production index fell to 47.8 in August from 51.4 in July. In August, it's not these two that matter really. The employment and the prices paid. Maybe they'll talk about it in the article. In August, U.S. manufacturing activity contracted at a slightly slower rate, with new orders growth the biggest factor in the 0.7 percentage point gain of the manufacturing PMI, said Susan Spence, chair of the survey committee. However, since production contracted at a rate nearly equal to the expansion in new orders, the manufacturing PMI increase was nominal. Respondents to the ISM survey widely cited tariffs as putting pressure on their planning, sales, and costs. One contact in the electrical equipment industry told the ISM they've raised prices by 24% so far, but these increases will only offset tariffs, meaning their margins won't actually improve as a result. Quote, in the 2 rounds of layoffs, we have let go of about 15% of our US workforce. So you can see here, 24% increase in prices, and a 15% drop in workforce. That's stagflation, according to this contact. These are high-paying and high-skilled roles: engineers, marketing, design teams, finance, IT, and operations. The administration wants manufacturing jobs in the US, but we are losing higher-skilled and higher-paying roles. With no stability in trade and economics, capital expenditure spending and hiring are frozen, its survival. Data from S&P Global published Tuesday morning, however, paints a more positive picture of the sector, with the firm's U.S. manufacturing PMI showing the strongest monthly increase since May 2022. S&P Global's U.S. manufacturing PMI came in at 53, above the 49.8 seen in July. This report also showed, however, that tariffs continue to act as a headwind for manufacturing. S&P Global Market Intelligence Chief Business Economist Chris Williamson said the report that factory inventories rose on concerns over coming price hikes and potential supply constraints. All right, we have Fed. We're switching to gold, actually. Gold and then Mr. Beast. All right. Looming Fed rate cuts fuel gold price bonanza to records. Gold's latest rally, triggered by expectations of U.S. rate cuts, concerns about Federal Reserve independence, and healthy investor and central bank demand, is likely to propel prices to new records over coming weeks. Analysts see spot gold, which hit a record high of $3,524.27 on Tuesday, in the $3,600 to $3,900 range in the near term to medium term, with potential to test $4,000 in 2026 if economic and geopolitical uncertainties persist. Gold has gained more than 33% so far this year, and analysts have steadily raised their average 2025 price outlook. Fed Chair Jerome Powell's acknowledgement of rising employment risks have seen financial markets betting on a September interest rate cut. Supportive for gold is the bearish dollar outlook, underpinned by expectations of Fed cuts, investors distancing from U.S. assets, and tariff-related economic uncertainty, said Ricardo Evangelista, senior analyst at Active Trades. The dollar has fallen nearly 11% since Trump returned to the White House in January. The softer dollar makes the greenback price gold less expensive for holders of other currencies. Meanwhile, Trump's criticism of Powell and attempts to remove Governor Lisa Cook have heightened concerns over the Fed's independence and sparked further gold purchases. The most bullish wildcard is potential interference with the Fed and concerns about the dollar's status as a safe haven, said Julius Baer, analyst Carson Menke. Among other factors fortifying gold's appeal are security concerns emanating from the Middle East and between Russia and Ukraine, and central bank demand, particularly from developing countries. That includes China's central bank adding gold to its reserves for the 9th consecutive month in July. World Gold Council data shows central banks plan to increase gold holdings as a share of their reserves while reducing dollar reserves over the next 5 years. The combination of a rising gold price and central bank accumulation means that gold shares of reserves have risen steeply for some central banks, said Michael Hsu, Deutsche Bank's precious metals analyst. Gold-backed ETFs have also seen significant inflows. Spider Gold Trust, the world's largest physically backed gold ETF, said its holdings rose 977.68 tons for a 12% increase so far this year, and its highest since August 2022. All right, I think we covered this. Gold hits record as central bank holdings top U.S. treasuries for the first time since 1996. That's interesting. Let me just skim through this. Market cycle price at roughly 90% probability. Okay, we covered it. And finally, Mr. Beast reportedly plans to launch a phone company. Mr. Beast, a 27-year-old popular YouTuber known for his elaborate challenges and giveaways, is venturing into a new realm. He's reportedly launching his own phone company. Interesting. According to Business Insider, which viewed a leaked investor deck, Mr. Beast is planning to launch a mobile phone service next year. Business Insider also reported that Mr. Beast and executives at Beast Industries are considering fintech and mobile gaming. The YouTuber's new plan includes establishing a mobile virtual network operator, a strategy that involves offering mobile phone service using existing networks from major companies like AT&T, T-Mobile, and Verizon. By partnering with one of these operators, Mr. Beast can provide affordable rates and good service without the high cost of building a mobile network on his own. This is similar to the tactics employed by other celebrities such as Ryan Reynolds and Mint Mobile, which was sold to T-Mobile for around $1.35 billion. T-Mobile provides an MVNO solution and has previously collaborated with Mr. Beast. The upcoming venture is part of Mr. Beast's larger strategy to broaden his brand, which includes food companies, Feastables, and Lunchly, as well as a toy line. This new phone company could help his business reach profitability. Although Mr. Beast has a massive fan base, around 430 million YouTube subscribers, his media business is not a moneymaker. Last year, Mr. Beast's side hustle, Feastables, generated around $250 million in sales and over $20 million in profit, according to Bloomberg. Meanwhile, his media business, which includes his YouTube channel and the reality competition show on Prime Video, lost nearly $80 million. That's really interesting. How can you not make money with 430 million subscribers? That's wild. All right. On that note, thank you very much, everybody. And I will chat with you all next time. Take care.